What's going on, everyone? The stock market was all over the place today as 52% of stocks in the S&P 500 closed up in the green. As we could see by looking at today's heat map, it was basically 50-50 and the momentum is mixed. Looking at the market right now, it is stuck in no man's land as over the past couple of weeks, we've seen a lot of selling pressure, but over the past couple of days, the market has been trying to hold strong. But again, this choppy, no man's land sort of price action doesn't really present the best trading opportunities. But the good news is that this is all set to change tomorrow as we have some crucial inflation data set to be released, which will give Jerome Powell and his other members of the Federal Reserve a lot more clarity as to how much they will cut interest rates by next week. So we have a lot to talk about today, and towards the end of today's video, we have a $2.7 million big money trade. So make sure to stick with us all the way until the end. But besides that, Tom, let's jump right into it.
Yeah, the market tried to continue to chop back to the upside today. This is actually exactly what I thought what the SPY would do, and I thought it was a pretty interesting move that it had today. You know, we saw a pretty big pullback all the way down to around 543.50, 544 area, and then we came all the way back up and actually closed around 549. Like, that was a pretty insane chop right there, kind of similar to the chop that we saw yesterday, right? Very similar. So I'm kind of waiting for the market here, Mike. I feel like that it's in a bit of a dead cat bounce situation, as a lot of people would say, in the short term. But everybody is kind of looking at, you know, the inflation data coming out tomorrow and what the Federal Reserve is going to do with their interest rates. And, you know, what gets affected by interest rates quite a bit, the big banks do, right? And we saw a lot of big banks fall off quite a bit today. You know, of course, the most popular one out there in the market, JP Morgan, whenever they're down 5% in a day, that's definitely a big sight to be held. And whenever you go to the daily chart, I mean, just look at the velocity of that red candle. Like, we have not seen a red candle like that on JP Morgan in a long time.
Exactly. JP Morgan is actually the United States' largest bank, and to see it drop this much, just like you said, is quite the sight to see. But essentially what happened today is the president of JP Morgan, he was at a financial conference in Washington, D.C., and he basically said, hey, analysts, we're actually not going to make as much money as you guys think we are going to going forward because the Federal Reserve is going to cut interest rates. And everyone was like, wait, what? Like, what do you mean? And then everyone started selling out of the stock, and it just made for a pretty brutal day, not only for JP Morgan, but other stocks in the financial industry like Goldman Sachs, American Express, Citigroup, and a whole bunch of other bank stocks. This is important because when you have bank stocks flushing down by 5%, especially the biggest bank stocks in the country, that is, one, not good for the market as a whole, but it also, brings a lot of, I guess you could say, added fear into the rest of the market, which makes it even harder for other stocks to truly break out. So keep a close eye on JP Morgan, Goldman Sachs, and other financial related stocks over these next couple days, because one, it is pretty uncommon to see drops like we're seeing now, but when they do happen, they get pretty crazy pretty quickly. And then when you combine that with the fact that we have crucial inflation data set to release tomorrow morning, it makes for quite a volatile situation.
Yeah, it definitely does. And that inflation data coming out tomorrow, 1 hour before the market opens, will be extremely important. At 8:30 a.m. Eastern time is whenever we're going to get the inflation data. We're going to get the CPI and, of course, the year-over-year, month-over-month, and the core inflation rates, and etc. But it's going to be a big event, Mike. You can see the consensus in the forecast right here. I thought this was very interesting for the year-over-year inflation rate. They're expecting it to come in around 2.7%, which I thought was a pretty interesting number. You know, that's quite a bit lower than 2.9%. That would be showing a pretty good drop there. And you know what they've been saying at the Feds, they're going to start cutting rates when they see that clear direction towards their 2% inflation goal, and that's getting them just a little bit closer there. Now, I will say the core is expected to stay around the same, so keep that in mind, but core excludes food and energy.
Yeah, I remember back in the middle of 2022 when the inflation rate was only at 9.1%. It's sure nice to see it the drawdown that we've seen so far. But as Jerome Powell would say himself, the job has not been done just yet. There's still some more work to do. But basically, going into the market tomorrow, it's going to be important to, I guess you could say, be prepared for this added volatility. If the data comes in a lot better or a lot worse than expectations, that is where like true explosive movement and opportunity comes in. Anyone can sit here and try and guess exactly what the inflation rate will be, but that's basically pointless because even if you could guess that number, it doesn't really have much of a useful impact in terms of like actual direction in the stock market, because sometimes you could have what appears to be good news have a negative effect on stock prices as a whole. So basically going into tomorrow, it's going to be important to keep an idea and just have an open mind as to if the data is going to, come in hot or cold, and depending on how it comes in, reacting accordingly. For example, if the inflation data comes in, let's say very hot, right? And let's say the market starts, absolutely ripping to the upside because investors are happy with the fact that we might see bigger interest rate cuts, then it'll be important to realize that bullish sentiment and, momentum building in the market and trade that aligns with that. And at the same time, if the data comes in, let's say cold, and the market starts to sell off in a major way and everyone's rushing to the exit all at once, again, make sure your trade aligns with that. But the most important thing above all else is being willing to adapt and I guess you could say move with the market. But either way, there should be some pretty good volatility coming into the market tomorrow. And I'm pretty excited that we have this event scheduled because the market has been pretty choppy over these past couple days.
Yeah, it has. And whenever we see the inflation data like this, it's been pretty high for the most part, but, we've been kind of stuck down here. You can see how on the chart, inflation has been stuck around like that 2.9 to like 3% area for a long time now. If we do end up seeing a drop down to like 2.7 or 2.6%, like that expectation is showing, then that'll actually be the lowest that it's been since March of 2021, which is a pretty big statement to say. So, if we break under 2.9%, that'll be pretty good. Now, I hope that we have better inflation data and we end up coming in pretty good under 2.9%. But then again, the stock market does not run on hopes and dreams. But, hey, I wish it did, right? If it did, we'd all be billionaires out there, right? But looking at the market for tomorrow, Mike, that's definitely going to be the big event to look for. As far as the earnings side of things, there's really nothing tomorrow unless you're into soccer. Manchester United reports before open. But the big thing to focus on is going to be that inflation data. And Mike, as far as the SPY is concerned, we're sitting right at that key resistance around 549 to 550. If we do not see a solid break above that in pre-market and the reaction is a little bit negative, I'm going to kind of look at the market right now like we're in a bit of a dead cat bounce situation, and I'll definitely look for that downside opportunity, especially considering that the SPY has just double topped on the daily chart and hourly charts.
Yes, I agree, because the thing is, when you combine everything you just said, plus the strong bearish seasonality that the market is in right now, plus just the election fears and everything associated with that, there has been a lot of just like profit taking and, increasing fears in the market. So it's like, if we don't see a truly momentum driven breakout to the upside tomorrow, I would definitely be a little bit skeptical. And I'm very curious to see like how the market ends up reacting to this data, because there's a lot of resistance overhead, and the market sure has a lot of work to do if it wants to get close to retesting all-time highs anytime soon.
Yeah, it definitely does, Mike. And whenever I'm talking about SPY here and some of these levels for tomorrow, 550, like we mentioned, will definitely be one of the bigger ones to keep in mind. I'm still watching 552, 553, and 555 overhead if the SPY does start to break out. In the short term, I really think 560 would be a pretty solid resistance if there's like a huge run tomorrow. I would doubt that we get much higher than that, but you never know. This data can definitely bring in some crazy things. And then as far as support, I'm watching 544, 542.50, and then 540 and 538 to the downside. But I figured I'd cover SPY while we're on it.
Absolutely. All right. Well, with that being said, Tom, let's jump right into some setups and predictions. A stock I'm watching very closely right now is Goldman Sachs, and it is to the downside. Like we talked about earlier in the video, there's a lot of selling pressure and bearish momentum building with financial stocks right now. Goldman Sachs is one of the financial stocks that tends to move in like a pretty momentum-driven way, and its options move great as well. For example, off of today's like 4.4% drop in the stock price, some weekly put options on Goldman Sachs popped up by like 571%. So there's some pretty good opportunities with this one, especially when it moves. And the price action has been pretty rough. So either way, it is definitely on my bearish radar for tomorrow. But one thing that I want to emphasize is that if we see the market just, let's say, rip to the upside off of, optimistic inflation data, then it won't really be worth it trying to like fight the overall trend of the market.
Yeah, definitely. And I think that's going to go for all of my plays as well. And of course, a lot of the momentum plays as well for tomorrow. But looking at my first play, Mike, this one's pretty interesting. I'm actually looking at ticker symbol DJT for tomorrow. We had those presidential debates tonight. I'm curious if Trump does good or even if he does bad, there might be some pretty significant movement with this stock in either direction, and I'll look to maybe capitalize on some of that crazy volatility. Now, when I say a stock's volatile, this one is extremely volatile. Its average percent rise is 5%. And these aren't options. This is on the stock. So, that's a pretty crazy average percent rise right there. The average percent drop is right around 3%. But Mike, I also had something pretty funny with this. I was looking through some of the betting stuff and man, I'm like, wow, what are some of these bets that you can place on these presidential debates? Like what will be said first, Twitter or X? Like how do you even come up with that? They're going to see if they handshake, if Trump says comrade. And I mean, there's all types of stuff you could bet on with these, but hey, let me know in the comments what you guys think about that debate. I think it's going to be a pretty interesting one.
There we go. Yeah, it should definitely be an entertaining night. We'll say that. But with that being said, another stock I'm watching pretty closely right now is GLD, and it is to the upside. GLD has been moving in a very consistent way over the past couple of weeks and months. I talk about this stock all the time. It follows gold prices, and we are just under the record high for gold prices. The reason I point this out now, and the reason I've been talking about it so much over the past couple of weeks and months, is because the war against inflation is kind of getting to that point where it is showing optimistic signs of being won. And a lot of times when we do see interest rates decreases or interest rate cuts, that does positively affect gold prices. We are not at an official breakout point for GLD yet, but we're getting closer and closer. And once it breaks, it should be a pretty good move. So GLD is definitely on my radar.
Yeah, that resistance overhead is huge. If we see a good move tomorrow with the inflation data, that could be great. And who knows, maybe if we see a lot of fear come in, maybe some people will run into gold. That could be awesome to see, but I'll definitely keep it on my radar. One other thing I'm keeping on my radar is Coinbase here for tomorrow. This is going to be my next play. If they can re-break back above 160, I'm going to keep watching Coinbase back to the upside. And I actually have a bit of a weird thesis for this one, Mike. So for tomorrow, we're going to have to see some pretty good momentum above 160 for this. But the thing that I'm really looking for is during the debate tonight, they might ask some questions about crypto. And I'm really curious to see maybe how some of the candidates respond to these questions. And based off their responses, who knows, we might see some better movement in the short term. So I'm definitely going to have this resistance on watch. We need to break above that. And hopefully we get some good press going too.
Sounds good. All right, Tom. Well, I think we are all clear for today's momentum plays. And with the first one, we have Amazon to the downside.
Yeah, Amazon's at a major resistance at 180. It's just really having a lot of trouble breaking out above that. If they end up falling down under 178.50, then watch them to the downside. But I will say, if there's a significant break above 180, maybe watch them up too.
All right, with the next one, we have Palantir to the upside.
Yeah, Palantir still killing it. I will say, though, what's going on in after hours here, Palantir? But for tomorrow, I really want to see a clear break of $35 even. That's been a pretty good high over the past couple days. If we see a clear break above that, then keep watching them to the upside.
All right, and then with the last one, we have Tesla for both directions.
Yeah, we did this one yesterday as well, and it really had a great breakout today, up above the 220 level and ran all the way towards 225, 226. So now it's double topping there. If it can break this double top today around 226.50, then watch Tesla back to the upside. If they end up pulling back hard under 223, then watch them back down.
Sounds good. So we have the downside level for a potential move lower. We have the upside level for a potential move higher. This is for Tesla. Don't forget about the upside level with Palantir and the downside level with Amazon. But either way, these three stocks are on watch for potential day trades tomorrow if and only if they break through the levels Tom listed. The more consistent and, just the stronger they move, the better the stocks become, the better the setups become. We're looking for strong, consistent momentum here. And again, if they don't break the levels listed, don't force the trades. But besides that, let's jump right into today's $2.7 million big money trade. And we are looking at ticker symbol KRE. So this is probably a ticker symbol that too many people haven't heard of before, but basically it is an ETF that follows a bunch of regional bank stocks. As we've talked about a handful of times in today's video, there is a lot of selling pressure and bearish momentum building in the financial industry as a whole. Looking at KRE, considering it follows regional banks, historically, when there have been, let's say, problems in the financial industry, the smaller regional banks tend to take a bigger hit than behemoths like JP Morgan or Goldman Sachs or, stocks like that. So either way, the big money put $2.7 million into the KRE 54 strike put options that expire on November 15th of 2024. I think this is a very interesting play as it has a good amount of time to it. These put options are just slightly out of the money, and it's a $2.7 million trade, so it's certainly not a small big money play by any means. Looking at KRE, the chart doesn't look all that strong either, and when you zoom out, this industry has been definitely struggling over the past couple of years, to just say it nice and simply. But either way, I think this is a very interesting play, and even if we see more weakness out of the market as a whole, this play has the potential to do pretty well. So definitely keep it on your radar.
Yeah, I like it quite a bit. There's a good lower high coming in here, which is nice to see. That's a good bearish sign. The only thing I'm a little worried about is it's getting pretty close to a little support here, right around like $53 to $54. It did kind of bounce back up off of that today, but overall, I love it, Mike. It has a little bit of time. Of course, if you get this, don't expect tomorrow to necessarily be like the main move out of this play, right? Like, it's going to be a play that lasts for a few days. Of course, tomorrow, if there is a big move, that'll be a big help, right? But if there's not, just don't be too surprised by that. Give it the time it needs, and I think that we'll see these banks end up playing out pretty well. I don't know about you, Mike, but whether we look at JP Morgan, the regional banks, Bank of America, etc., I've been kind of waiting for them to dip for a while now. I know Bank of America was one of the big ones kind of kicking things off, and it's good to see the second leg starting to come in on some of these bigger banks here.
No doubt. So yeah, definitely keep them close on watch for tomorrow. But it's definitely going to be an exciting trading day tomorrow, as this inflation data will have some pretty important effects, not only for just market sentiment, but it'll also, heavily influence the rate cut path going forward. Again, rate cuts are scheduled for next week. It's been a long time coming that many people have been waiting for. And it's really just a question of, are we going to see a 25 basis point rate cut, or is it going to be a 50 basis point rate cut? And right now, there's like a 69% chance that it's going to be a 25 basis point rate cut. So that's pretty exciting. And as volatility continues to heat up and get stronger, it'll just present better and better trading opportunities. And, from this point until the end of the year, I think there's going to be no shortage of that, especially as the election gets closer. The market continues to, do what it does best. And, just as I guess all of the crazy things going on in the world continue to develop. So if you guys are new to the channel, consider destroying the subscribe button to get our videos recommended to you more often. In every video, we cover the most important news, information, events, charts, and data that you have to know for the market. It takes us a long time to make these videos, so if you subscribe, you'll get them recommended to you more often. And before we close out, we have to give a giant shout out to today's member of the day, Jared F. in the Stocked Up Discord. He has been crushing it lately, and as we could tell by these screenshots, it's been a great month and a great week for Jared. So keep on rolling it, and we love to see screenshots like this one. But besides that, thank you all so much for watching, and let's crush it in the market tomorrow.